rather than having 50 or 80 odd companies in our portfolio, what we've really done is we've focused on purchasing the companies that we've had the highest conviction in, the companies we liked the most. And so we tend to have somewhere around about 15 stocks in our portfolio. That means a number of things. It means if we're good at our jobs and we're good stock pickers, it means we'll probably produce alpha, which is what we've seen over time. But it's possible, or the way we drive alpha is because we don't need to worry about what 80 or 100 or 200 stocks are doing. All we need to focus on are the 10 to 20 stocks that we have in our portfolio. And because we're concentrated and because we have such a focused portfolio, we can spend the time doing the deep dive due diligence into each of these companies and get really, really comfortable with these businesses. So when we had an interest in Metcash, perhaps what a lot of other brokers or fund managers might do is they might have a look at the numbers online, they might have a look at the broker reports, they might call up management, and they might try and get a sense from a distance as to what they think the business is worth. So we thought that's all fine and good, and the first point of call is always reading the company's financials, which is available through the ASX or through ASIC if you want. We always speak with management because we think it's a good idea to speak with management, get a sense of their quality. But what we did that I'm not sure that a lot of other managers might do is we took off a couple of days, got in the car and visited IGAs around town. So we mapped out a whole route around Victoria, and I think we visited something like 12 IGAs over a 2-day period. And just speaking to the managers of those IGAs, speaking to the owners of those IGAs, we got insight that we simply couldn't have gotten from the print media out there. And nothing we were told was especially surprising, and nothing that we were told was inside information, but what we got was we were able to match what management were telling the market and the market didn't believe with what people on the ground were telling us. And when we discovered that the people on the ground were actually seeing the results that management was promising the market, we got comfortable that this was probably a good idea. And once, if you can find the time to do the research, and at the end of the day, our job as investment managers and investors generally is to get an information advantage against the market. So if you can find a way to gain that information advantage, then you'd be mad not to do it. So again, we can do it because we have a concentrated portfolio. We can do it because at any given time, we're looking at maybe 1, 2, or at the extreme 3 ideas at one time. But I suspect that most portfolio managers and most portfolios out there can't spend that amount of energy on any one given idea because they're looking to manage 80 or 100 or 200 ideas at once.